And we are back.
We are back.
Back again. It's the end of the year, December 31st.
31st, yeah.
It's the end. This is it. It's not
There's
the
no tomorrow.
There's no tomorrow.
No, it's the end. Like you said, it's the end of the world tomorrow.
Wow. This is that Mayan calendar thing they were talking about years
midnight.
ago. Yikes.
Yeah.
Jeez, I have some affairs to get wrapped up.
And whatever time zone you're in, they're already gone.
Whoa.
Yeah, I know.
You think they'd be covering this on the news?
You think so?
I guess we're covering it.
We are definitely covering right now.
We're the news.
We are the news.
Well, you heard it here. I feel like giving you this information is kind of fruitless at this point. But yeah, no. I think actually we're going to make it till tomorrow.
I think so. I have a inclination of
if this cold weather breaks at all, or it may break us before that.
Maybe. It's been pretty cold up there.
It has been ridiculous this week. It's been nice that there's been no news.
No news.
It's been barren land. We've been covering the top 5 financial stories of 2017.
Yes, we have.
Yeah,
we still have 2 more to cover.
Yeah, 2 more to cover, right? So I think a lot of the big stuff, the stuff that really draws the interest, was probably number 4 and 3. Medical marijuana, cryptocurrencies.
Yeah, maybe. I think number 1 will get a lot of attention,
I think 1's probably the most important one.
Definitely one. We're not going to tell you what it is yet. You guys will have to tune in tomorrow for that.
Yeah, that's going to go up tomorrow on the actual 1st.
Yes, on the 1st, yes.
Yeah, so there's a lot of stuff that we've covered this year, though. We're going to get into a little bit of a review throughout the year. I would imagine we'll probably do some resolutions. We'll talk about what's going on next week. There wasn't a whole lot of news this week. So podcast number 11. This is...
No.
This isn't?
No, this is podcast number 10.5.
10.5?
10.5.
How does that work?
Just the way it's going to work.
I don't know.
There's no news, right? So it'd be something different than we normally do.
So this is just kind of a bumper podcast.
Yes, definitely.
We're just getting you through to the...
Filler. Yeah.
So there you have it. If the world doesn't end tonight, this is a little bit of a filler. I'm going to have to learn how to use decimals. 10.5.
10.5.
Interesting. We should have done a fraction.
Oh, we could have done that.
Yeah. No, we'll just go with this. Okay, well, you lead the way. Let us know what you want to talk about, I guess.
Well, first of all, I'm Anthony from Wall Street Breakdown.
I forgot. Yeah, that's true. Yeah. You are Anthony.
And who are you?
I don't remember who I am. I've been ready for the New Year's for a couple of hours now, and I'm somebody though.
You are somebody.
I'm sure I'm not a specter, am I?
No, I can't see through you, so you're not a specter.
I'm Cody from Wall Street Breakdown.
There you go.
Thanks. I just needed a little bit of inspiration. And okay, lead the dance. 10.5.
10.5. Let's take a little bit of look at the Dow Jones. How did they do in 2017?
Good year. It was a good year for markets all around. I mean, the Dow Jones was up 25% to end the year. It was when you start talking about cryptocurrencies and marijuana stocks and stuff like that, there's a lot of stuff that was ripping, and it was just making so much money that I think people really lost the real news of things, where you talk the Dow Jones and the S&P and the Nasdaq just up in the 20% marks for all of them. Dow Jones 25%, S&P 20%, Nasdaq like 28%. We didn't have a down month.
No, we haven't.
I mean, all in, when you consider everything, dividends paid out and the price of shares increasing every month was positive, was net positive. That is amazing. That's the first time that's ever happened in the history of the stock market. So, I mean, we have had...
This is history in the making.
It was history in the making for records, too. I mean, the Dow and S&P broke records on... They not only ended the year on record numbers, but they broke record numbers on record number of trading days. So not only were we going up, unbelievable numbers going up, but there were record number of trading days where those records were broken. So it wasn't just consolidated into a quick 2 or 3 month, peak where we just shot up.
Yeah, no.
This was throughout the whole year, setting new bars over and over and over again. Yeah, Dow Jones, S&P, and the Nasdaq. I mean, for people that kind of get lost in the news, and I know we're news,
Right. Yep. We are.
You don't want to be taking your information from the news as much as you want to just glean a little bit off of what we're giving you.
For sure, yes.
And then go out and do your research. That's ultimately what we want to, get across to people. It's don't turn on CNBC and get lost in what's going on there, because you'll just be talked to by a bunch of talking heads that are going to talk about what basically is the Entertainment Tonight or TMZ of the stock market.
Right. Yeah.
They're going to tell you the Kim Kardashian news.
Yes,
They're not
they
going to
are.
tell you the prudent news that you want to know, right?
Yeah.
You're just not going to get that kind of stuff. So when you watch that stuff, you get inundated with flashy topics like cryptocurrency, and you don't get the basic news, which is that the markets as a whole were just doing so well that if you were just, diversified in the indexes, you would have found yourself having a marvelously decent year.
Oh yeah.
You
for
could
sure.
you could have gotten these indexes with a really low management expense ratio, 0.5%, 0.75%, and made out like a bandit, without having to have near the type of risk that was involved in a lot of the stuff that did go ridiculous. I mean, Canopy up crazy, Aurora, Afria, all the cryptocurrencies. There was some stuff that was up enormous in some very speculative markets. But when you talk about the actual markets as a whole and buying, just a basket of funds, to not be involved in the indexes as your main source, it seems like kind of a fool's game this year.
Oh yeah, for sure.
And I would imagine going forward, we're gonna, as long as the trend stays the same, I don't see a lot of. There's a couple industries pulling things down or keeping things, like at par, but a good majority of industries out there that make up these indexes are doing very, very well and seem to be doing really well going into 2018. So we can only hope that continues to happen.
Yeah, me too. Let's talk a little bit about crude oil.
Yeah, oil was up from the low of this year, up from the low in 2017 to close out the year up 43%. The price of gas up here is picking up. There's no question about that. This is WTI crude, obviously, that we're talking about, not Brent crude. But I mean, still, it's up up here in Canada. You see the oil and gas industry starting to pick up. It's been picking up all year. It's not picked up, obviously, to the levels that we'd like to see, the levels that we'd seen in the past when oil was well over $100 a barrel, or around $100 a barrel. So I mean, you're not to that level yet, but we're definitely seeing that pick up, and you're seeing it in the price of oil. A lot of people thought that, alternative energy sources were going to end up basically boxing oil out, and we find out that it's harder and harder for people to get rid of their dependency on oil.
For sure it is. Yeah.
And for all these alternative energy sources to have places for you to go out and get them. The infrastructure to use natural gas and to use oil is already there. Gas stations, whether it's the way that you get natural gas into your house, that stuff's all there already.
Yeah.
You're going to have to retrofit things with solar or wind, and you're going to have to go back and spend billions of dollars on infrastructure overall.
Oh, you are, yeah.
So, I mean, our dependency on this, and I know there's a lot of, people who don't like the idea of, the environment being, we had Trump come out, I think it was this week, and make,
I think it was this week.
Yeah, and make fun of global warming a little bit, because it's been cold, not just here, but it's been cold in the U.S.
It has. Serious
cold snap going on across the Western Hemisphere. But, there's dependency on oil is there. Oil's clearly coming back. I don't know if it's going to come back for 2018. I don't know if this price is going to be a sustainable price, but it's something where I think oil is going to find somewhat of a nice, comfortable landing spot, because we know basically how much oil we're pulling out of the ground in the U.S. and Canada and all that. Now that we've got over the idea of peak oil, that a decade ago we thought we had crossed peak oil. Then with the advent of fracking, and we haven't seen any cities collapse to earthquakes.
Not yet.
No, fracking hasn't caused near the problems that a bunch of environmentalists were claiming that it was going to cause. And we don't, purport to believe that that's going to end up happening, because there's no body of work that shows that it's going to happen. So we know roughly how much oil's out there. We know how much oil OPEC is going to release into the actual retail market. We're not entirely sure how long OPEC's going to stay relevant, but as of right now, it is. So, I mean, I think oil's going to find a nice soft landing spot. We're going to get a trading range that I think probably isn't going to be so erratic. It was up way too much years ago. It was down way, way too much in the last couple of years. I think this bump back up is putting oil back at a nice even level where the marketplace is probably gonna be able to stomach it at the retail level and at the futures level as well. So
How did gold do this year?
Gold was up as well. I know a lot of people think cryptocurrency is the new gold. Gold
Yes.
2.0 is
Everybody
what
thinks
they've
that,
been
yeah.
talking about, right? But from the low this year, gold's up 15%. Gold never should have been up as much as it was years ago either. Gold was up some exorbitant number, right? It just never should have been that high. But gold ultimately still is gold. There's no gold standard anymore because no actual countries hold the amount of gold that you're supposed to actually leverage what your currency is worth on the open market. And that's kind of what gold was used for at one point in time. But gold's not like that anymore, but gold is still very, very valuable, still very scarce. I mean, I know there's a lot of gold out there, but there is only a limited amount of gold still left to be, pulled out of the earth. So gold is something that it retains a value because it's not only useful on my finger for my wedding ring or, like for your, like donkey rope chain, so it's for your rap career later on, but it's used in a lot of manufacturing processes as well.
Oh, yeah, for sure.
Like it's a good conductor and stuff. So gold is used in a lot of manufacturing. So gold is definitely something that is going to retain value. It'll never be, I don't think, where it was before. I don't expect to get that high, but gold being ridiculously low, that happens. When markets are up, people don't feel the need to hedge with bonds or with gold or anything else. So those kind of things end up taking a beating. When markets are bad and people are scared, they buy bonds, they buy treasury bills, they buy gold. So, I mean, gold is, again, much like oil, probably finding itself in a nice soft landing spot where I would imagine if the economy continues to build or even just slows down slightly from all these up 20% indexes, that, gold will probably hover around in that range. And, a 15% up or down increase from around where it is right now seems pretty understandable. Yeah. Not an investment to go out and get.
No, probably not.
Not something you're going to run out and put all your money into gold or anything, right? But I mean, gold is still definitely one of the commodities that's followed heavily, regardless of what people might think of gold now compared to 50 years ago. So always relevant to talk about.
I was talking about some of the IPOs coming out next year for 2018.
Yeah, there's actually a couple of big IPOs that are lined up for next year. We've got IPOs from Dropbox, which is like a cloud service storage kind of thing, much like Google Drive or any of that other stuff, or Amazon Web Service or any of that. So Dropbox is going to be coming out. Lyft, which is a ride-sharing program like Uber. They're going to be going public a lot quicker than Uber is. Lyft's been having a lot less problems with regulators than Uber's been having. Uber's been having a lot of issues.
Problems,
And I think Lyft going public is going to have them even more heavily scrutinized and more heavily regulated, which I think is going to help insurance companies and stuff be a lot more comfortable dealing with them, allow cities to be a lot more comfortable implementing Lyft. So I think it's actually a good thing to go IPO. And I know that Uber is trying. They got SoftBank involved now over there.
That's correct.
And SoftBank is such a big company that they have a lot of reach and they've got a lot of pipeline where they can help get Uber to where they want to go. I think Uber's still talking about a maybe 18-month time frame for them to go public. But they've had so many issues with the identity theft thing that they didn't reveal for like a year.
Yeah, they had like hackers cover it up.
Or they tried to cover it up, right? And Lyft hasn't had near the type of bad publicity that Uber had. Uber had some price fixing issues a couple of years ago. I don't know if you remember, like on actually New Year's, they had some price fixing issues where people were getting $1,000 bills.
I heard about that.
In New York, like major metropolitan areas and stuff. So Lyft hasn't had near those kind of issues, and I think that's, again, going public is going to add more scrutiny, more controls, and ultimately it's probably going to add a lot more acceptance in the marketplace because once you become publicly traded, you know that all eyes are on them.
Yeah,
and
definitely.
People are pulling you apart trying to find flaws. Yeah. Analysts are looking at you trying to find whatever kind of backdoor they can get into to make sure that you're doing everything right. So with Lyft becoming public, I think it's probably going to add a lot of credibility. 23andMe is another one of the big companies, so genetic research firm. They do a lot of DNA testing and stuff like that. They'll test your DNA. They make like medical databases for DNA that they end up selling off to pharmaceutical companies and other companies that use DNA for testing. So they're going to become public here next year at some point in time. SpaceX, Elon Musk's space company. So no real tie-in to Tesla specifically.
No,
because it's just Elon Musk
Elon
again.
Musk, yeah.
But it's a company that's been around a long time.
It has been,
we've been hearing about it for a long time. It's the race to Mars, I guess.
Yeah, I think he says he wants to be the first person to get people to Mars.
I think.
Who knows?
Who's the other one that's working on going to Mars? Is it Virgin? Is it Richard Branson?
I think
Virgin. I think Virgin is the other one that's working on trying to go to Mars. There's another big company out there that's working on that's saying they're going to be the first ones now going to Mars. I'm thinking that it's Virgin, but I'm not. Don't quote me on that 100%. We obviously know SpaceX is definitely trying to make that happen. Pinterest.
Pinterest.
Yeah, a lot of people use Pinterest. They got the app. It's for, design, home design and style, things that people craft, all sorts of good stuff. My wife uses Pinterest. Most of her friends use Pinterest. It's I don't want to say it's geared more towards women than men. I'm sure there's lots of men that use it, but it's more, it's not stuff that I'm used to. It's not, I'm not doing a lot of arts and crafts. No, I'm not, no good ideas ever strike me that don't have to do with the stock market or the gym.
Right.
I usually have different colored socks on, and I only own white socks, whose socks am I even wearing?
Right.
So Pinterest isn't going to give me any good relevant ideas. But it gives a lot of other people good stuff. I think they got recipes on there. So, I mean, it's great for, people that are doing all that kind of, wanting to make their house look nice and trying to get, budgeted, well thought out ideas. So Pinterest is going to go public next year. I think they got 175 million users.
That's
or something.
A lot.
It's a lot of users already, right? So again, it's going to be a matter of making sure that company can monetize itself.
Yes.
So it's going to be through advertising. They're going to have to, I don't know what kind of advertising they have on there now, but I mean, ultimately when you're an app-based company, which is what they are, you're going to have to get some advertising, or you're going to have to monetize through some serious advertising. And the last one, Coinbase.
Yeah.
We hear Coinbase is going to go public. That's where all the cryptocurrencies are traded there at Coinbase. They've had some regulatory issues recently and some problems with, there's been some problems. Again, going public could help fix that. It adds a lot of scrutiny.
It does, yeah.
Will it actually take place? I mean, we heard Novagarts decided not to do his cryptocurrency hedge fund there, and we've heard that Goldman's going to do a cryptocurrency trading desk, but they're not going to open it till June. So a lot of people that were pushing for crypto, and then some of the ones that were saying they weren't going to get on it are putting very long time horizons. Yeah. Because if crypto pulls back ridiculously significant, which is a very strong possibility, I think. I mean, the market's heated up through retail money, not institutional money, right? So I mean, you could see if Coinbase has a much longer time horizon for going public, let's say in the fall or early winter of next year, there might not be a market to go public too.
Probably not.
But if they do it quick, which I don't think they probably will, because I haven't heard that anybody's underwritten Coinbase yet, or that there's no prospectus going around. That's for sure. So Coinbase is in theory going public in 2018, but I have not heard any kind of set date. 6 months, 8 months down the road, it might not near be as relevant as it is today. If it was public today, that'd be one of those IPOs that would probably it would probably take off, like a greyhound. But it may 8 months from now, it may take off like a horse that might be needing to take it to the glue factory.
You're right. We have some notable earnings to go over here.
Yeah, there's some notable earnings, I guess, for next week, right? We've got Rite, retail pharmacy services company. They've got earnings coming out next week, much along the same vein as like a CVS, not near as robust as a CVS, obviously, or a Walgreens or anything like that. But, like much like Rexall up here, they've got their own brand of stuff, and they're not trading very well. They're way at the bottom of their 52-week range right now. I think they were 8 something at one point in time this year, and they're down to like $1.50 or $1.60. So. And I mean, the EPS is still positive, but I think their price to earnings is like 23 or something. So it's not. It's tough to not call it. Well, you don't want to call it speculative. I mean, they own a lot of stuff. And they've been around a long time. But it's when your price is down that much, people are crushing you. Don't catch a falling knife is always the best kind of advice. If it's down there that far. Like I probably can't go much farther, but it might not be able to pick itself back up out of there as well.
Right.
The market's only getting more saturated with the potential of Amazon getting involved. So Rite Aid might be finding its way on the outs, as brick and mortar is already expensive to operate.
Yeah,
and you find your share price down that far. Sonic next week. Little burger drive-in company. Burgers, milkshakes, all that good stuff. Sonic also owns a lot of the property that they're on, and they lease that property out to the franchisees and stuff. So they own some real estate and stuff as well. They've got earnings next week. Monsanto, the big, bad, scary Monsanto, the genetically modified seeds and everything.
That's right, yes.
Yeah, GMO, everybody, like genetically modified stuff people are terrified of. But the fact of the matter is Monsanto is the leader in that industry. There's no question about it.
Oh, they're definitely king.
They are, yeah, and there's a lot of science involved in that. So, while it's a very boring company to follow and it's very predictable, the amount of seeds they sell and everything is all very, very predictable. It's a company that's not going to do significant amount of growth when you're looking at just the share price. It's a strong company with competition that is don't have much of a puncher's chance against Monsanto. So yeah, fertilizer and seed company Monsanto. Pricemart, a lot in the same vein as Costco, just not near the same. So they got, they sell things in bulk. You need to have like a little membership card that you pay for. They've got themselves a food court, and they do tires and stuff as well, which is good because that's some stuff that's tough for Amazon to get into.
For sure.
It keeps you out of that business, right? People aren't going to be getting tires shipped to them. That kind of kill the margins there a little bit. And they're not up here in Canada. They're in the U.S., they're in Latin America, and they're in the Caribbean, I believe. So Pricemart's got earnings next week. I can't remember if there's anything. We've got Constellation Brands.
Yes.
So yeah, they just got invested here in October up in Canada in Canopy Constellation Brands Liquor Company.
That's right.
Home of Corona.
Home of Corona.
Yeah, that's a popular beer, right?
Very popular.
Yeah, I don't do any drinking myself, but I would imagine that's one of those ones.
That's one of those ones.
That's one of the ones. You say that brand name, and I know what you're talking about. I've honestly never had a Corona in my life, to be honest.
Bad one. They're not too bad.
Not too bad?
Not too bad.
Not too bad.
They're kind of a light beer.
It's a light beer.
Yeah,
right?
it's not too bitter.
Constellation's got a lot of stuff, though. They got a lot of stuff under that brand name. It's a big company, one of the big liquor. They're not near Anheuser-Busch InBev or anything,
right,
or Molson Coors, but they've got a lot of strong brands under the Constellation umbrella. So they've got earnings next week, and that's about it for earnings, to be honest with you.
Yeah, it looks like that. Yeah. Not too much. We have an auto sales report coming out next week.
Yeah, we get auto sales next week. It's really incentive-driven marketplace right now. Auto sales, they're expecting to fall. Kelley Blue Book's expecting it to fall. I think it's like 1.57 million vehicles sold in December compared to December last year. They're expecting about a 7% decline. So, we'll see. It's always nice to kind of see who's doing what, but on a month-by-month basis, it's really not something that I put too much stock into. I'm always looking at car companies and what they're doing, like inside their business and how they're controlling issues. Like I liked what Ford did much earlier this year, where a lot of their compact vehicles and sedans weren't selling very well. Instead of consolidating plants or shutting plants down, they went on like 3-week moratoriums on different plants where they just shut things down for 3 weeks instead of laying people off, just so that they didn't have overt like amounts of supply and stuff.
Right.
So I think that's a lot smarter. So I look at the way that companies work internally more than what's being sold. I mean, it's a great, I guess it's a good indicator of just what's popular at the time. But on even the last few months, we talked about this a while ago. The last few months, there was auto sales jumped. There was a big jump in auto sales. And if you were to look at that as just a standalone number, you're like, oh my God, auto sales are up. And, we know that, a lot of vehicles out on the road are still well past that 7-year, expiry where people start to buy new vehicles. The market's still past that expiry date, which people consider kind of the time when people buy new cars or new trucks or SUVs or whatever you want to call it. But you see that jump and you think economy's doing good. People are making money and Bitcoin and this and
Yeah.
that. They must be buying cars. Well, no, they aren't. It was insurance settlements from hurricanes that caused the auto sales to jump in November and
Right,
October.
that's right.
You know, it had nothing to do with auto sales all of a sudden being significantly higher because of the economy or people deciding to splurge or anything like that. It was insurance settlements.
Yeah.
So people had their cars destroyed back in hurricane season with 2 major hurricanes in the United States. And, you know, all this, they had to buy cars because insurance was paying them out and they need a vehicle. So you get a spike.
Right.
But if you don't look at those numbers a lot deeper, those numbers, they're very surface numbers.
Right.
You know, if you're investing in a company, a specific company, yeah, okay, I want to get a little deeper. If you're investing in the auto industry as a whole, you're buying an auto industry ETF, then okay, maybe sales as a whole might be a lot more relevant. But this is kind of the last end of things when it comes to the major retailers, the major manufacturers,
Right.
the Fords, the Nissans. Because a lot of times you move on to then, you know, servicing is very minor for new vehicles. You know, so you move on to, you know, the parts companies and the companies making aftermarket stuff and like Advanced Auto Parts or Interstate Battery. You move on to other companies that then are servicing vehicles down the line, a Goodyear tire, you know, like those kind of companies become the ones that are relevant to a lot of the older vehicles on the road. So auto sales are kind of that last line of, okay, so we sold that many cars, but what's Ford doing, you know, tomorrow? You know, what's GM doing tomorrow? And I mean, if you looked at GM for sales, the sales don't jump off the board. But then when you look deeper into the company and you realize that GM is like on the forefront of autonomous vehicle technology, well, 4 or 5 years from now, you could see GM doing crazy stuff. But if you were looking at these last line numbers right now, you'd look at it and be like, GM, middle of the pack. Like it's nothing really relevant. But you look deeper into the company as a whole, and all of a sudden now the company as a whole looks like it's got, you know, prospects out in front of some of these other companies by a fairly large margin. If so facto, that sort of takes hold and GM really does get all the technology fleshed out properly and get to market, maybe not first, but get to market with the best and cheapest, most efficient stuff that there is, right? So auto sales, it's a good number, but I mean, it is what it is actually.
Tesla has a fourth quarter report coming out here.
Yeah, we're going to find out deliveries for the SUV, and we're going to find out deliveries for ultimately the Model 3 is, I think, what everybody's concerned with, right?
I think so, yeah.
A little over 5,000 is what's expected for actual deliveries. They're not going to be anywhere near, I think, the numbers that they were projecting back in August. You know, so I mean, we're going to see what it is. It's a big report. It's a company that's been having a tough time in the media recently. A lot of people talking about, you know, they're overvalued and they overpromise and underdeliver.
That's right.
And those are big issues. And that starts to really put the scarlet letter on your company. So you, instead of the T, you know, like you get the scarlet letter on there. And people shy away from it because are they overvalued at their share price right now? Yeah, significantly. Yeah. They're overvalued for performance in the future, but that performance was supposed to start to come to fruition now. And it's, while the vehicles are great, while the semi-truck has got pre-orders from Pepsi and FedEx and Walmart, they're pre-orders of 150 or 100. It's
not too many.
It's nothing ridiculous, right? And it's, when are those going to go into production? Only time will tell.
Yeah.
So we need to see Tesla start to perform on the numbers side. That's a auto sales number I'd be a lot more, not even the sales, but the actual deliveries. Right, because you know Ford delivers.
Oh yeah,
you know GM delivers. Those are sales on. Right, the deliveries take place the same day the sale happens. Tesla, they can backlog stuff. They're not Boeing.
No.
Right, you can have a backlog at Boeing 6-7 years, but people want that Dreamliner because the timeline of how long those planes are going to be good for is forever almost. Right, like, it's not forever, but it's a generation.
Yeah.
Whereas with this, I mean, to have a backlog of a car and have to wait 2.5 years or 2 years to get delivery of a car, you know, is imagine if you went out to buy a 2017 car today and you couldn't get it till January of 2020.
Yeah,
you know, you'd be a little upset.
A little bit, yeah,
sure. You know, like, sure, you want it because it's a status thing, but I mean, geez, by the time some of these people who are ordering the Teslas now get their car, Tesla might be a brand that's been tarred and feathered in the marketplace.
Oh, for sure, dragged through the mud. Well, think that pretty much wraps up almost all the news.
That's it for next week. I mean, hopefully there's going to be news. Because let's face it, people went away for the holidays. There's a reason the news has been fairly tepid these last couple of weeks. Yeah. And it's because, traders and the people working at these companies, they've gone away for the holidays. Nobody tried to sneak any news in. No. Everything's got to go past regulators and stuff anyway. So everybody took a few weeks off to spend time with their family. I mean, up here in Canada, I don't know what it's like for other people, but kids just got off of school the weekend before Christmas. So, school doesn't even get back in for another week still. Yep. So I would imagine next week news will start to trickle in.
Oh, I'm sure it will.
And then we will start to get where January really it's cold. It's time to get back in the office, get back to work, because you got to start making those percentage gains early in the year. If you want to sell in May and go away, if you've got any predisposition to taking a very long late spring break that runs deep into the summer to Labor Day, which happens with a lot of traders, you got to make hay early. So you better get those percentages up and you better find the right trades. So news starts to happen in January. There's no doubt about it.
Let's talk a little bit about their channel for the next year.
Well, yeah, our channel, I think we're going to continue on doing what we do, keep doing the podcast. Obviously, not a lot of 0.5s. It's going to be a lot of news podcasts, except for, these holiday weeks, especially this season. It's at Christmas, New Year's season that really is the down period for everything. Going to keep knocking out podcasts. Going to keep, same thing with the videos, keep hammering it out. We're going to try to consolidate, I think, some of the earnings videos a little tighter. I'm going to try to consolidate those and make it so unless it's a big earnings call, Costco, Apple, one of them, I think I'm going to try to consolidate those so you get 2 or 3 earnings calls in one video. Things will be time stamped so you can move along a little quicker. Right. Because not everybody's interested in individual earnings calls from Darden or KB Homes or whatever it happens to be. So we'll consolidate those based on the days, especially when we're in the thick of earnings season and you've got 12 or 14 earnings calls you could do at one time. I'm going to go back to doing what we were doing. I think it was in September where I was doing earnings calls where I was doing, 10 eurnings calls in one video. Right. And I'll just have you timestamp things and make it a lot easier for people to traverse through that stuff and get a good look at that kind of stuff. We're going to add some more educational videos. We've talked about this before. We're going to really get down to the crux of a lot of investing. I talk to a lot of people and they just don't understand how things work. And I end up referring them to other channels, I guess I would say. But even those channels sometimes don't break things down very well. There is a very big disparity between what institutional investors do and what hedge funds do and pension plans do and how they invest money. And they basically invest money the opposite of how a retail investor does. And there's a lot of just bad information and misinformation out there about the way that you could invest. You could make all this money day trading and all this babble. It's nonsense. That's the way you blow up accounts. So we're going to teach people how to, if you want to do it on your own, we're going to make sure people understand the nuts and bolts of things from the initial public offering and how those things are underwritten. And if you have a business, we're going to talk about, the difference between an angel investor or going out and finding venture capital. And then all the way through, if you were to make trades, what a stop loss is and, market orders are, and really get down to the nuts and bolts of everything so people understand that. And then on top of that, I'd like to really get into teaching people how to hedge. I don't think people understand what having a put order is and options to hedge positions. They just don't get that if you were an institutional investor, you're actually betting against your own purchase. You're going to purchase. I'm looking at my science can here. You're going to purchase Monster on the assumption that Monster is going to go up because you've done your due diligence and all that kind of. But then you're going to buy options on the idea that Monster is going to go down, and you're going to pay that premium potentially to have to exercise these options in case Monster does go down, so that you may be limiting your upside gain by having to pay this downside thing, but you are limiting your downside risk substantially, so that if Monster does a $5,000 move to the downside in your portfolio, you only suffer a $1,500 downside. Right. But if you onto the upside, if it moves 5,000, you might only, incur a $3,500 gain. But people just don't understand, the actual hedging process and how you go about protecting your back end and making sure that Investing is not about making money today or tomorrow. Investing is about the preservation of capital, taking the capital you have right now that you've got, that you're putting into your account, putting that there, preserving it, not blowing your account up, making foolish intraday trades or chasing after money or cryptocurrency, you know what I mean?
Yeah.
And then on top of that, not taking that money out when you make gains as if that money's supposed to be income. It's not. It's supposed to continue to compound on that principle so you can further flesh out your position. So you can decide what you want to get into and get into bigger positions, but diversified. Again, not bigger positions like you're in two things. You're in, 10 or 12 or 15 things in your portfolio. But then on top of that, the way you diversify by hedging against those positions so that you're long and short a lot of times the same thing, or you're long GM and short Ford, whatever and people need to learn how to do that, I think, on a much more robust scale. I think the information out there it's very convoluted and it's tough to find because as much as we want to believe all the retail or the institutional investors, your hedge funds, the brokerage is more than a hedge fund. I would imagine there's very few people in here listening to this that are, invested in a hedge fund.
Right.
They're a lot more activist investor than even we are. But if you're through a brokerage, the brokerage wants to keep you, but they just want to keep you just enough to keep you there. They're trying to make money off you.
Exactly. Yeah.
We're trying to make money for these people that are listening.
Yeah.
We're doing the complete opposite. I used to work for a brokerage. I don't like the brokerage system. I left because you were jacking money from your own clients. You're jacking money on the top end and then jacking it on the bottom end. You want to make a trade? Let's make a trade. Cool. I'll take a little off the top for you to get in a position. Then when you want to get out of the position, I'll take a little off the top again. And you might have lost money in that position. So now your principal gets dwindled down, and a lot of those brokerages, they're not encouraging me as an advisor. They weren't encouraging me to hedge these people's positions at all. They were just build a portfolio, so that these people, and so in an up market, you're up, but in a down market, you're, you could blow up quick or you could take serious losses. But the fact is to build real accounts, people need to learn how to do stuff. So adding educational stuff to the channel, now that we've added a lot more graphics packages like you're working on, like we want to get to where I can mock up some charts and show people how things work on a much more, like a fantasy level. Like let's say this was this and let's say this was this. And then over XYZ time horizon, this was available for an option and this stock price did this, and now this is how exercising that option would save you this if so facto this scenario took place, and how you can then implement that in your account, because a lot of people trade on platforms nowadays. They don't trade through brokerages or financial advisors. Some of them do. And, we want to teach you how to pick a good advisor and do all that stuff if that's something that you're into as well. And how you can, I want to have people educated so they can go in and sit down with their advisor and pick their advisor's brain and realize that advisor doesn't know as much as he think he knows, so that they can say, like, this isn't the guy for me, and decide to move on to someone who's the right pick for them. Because I think a lot of people go in and are quarter educated, talking to a guy who's half educated, and the half educated guy sounds like he knows what he's talking about. And in reality, he wouldn't be someone you'd trust him, like roll up your pennies for you, let alone invest your money, but because he sounds like he knows more than you. So if we can educate you to know some stuff that he should be able to answer quite easily, I think then we end up empowering the retail investor, and then they can either choose an advisor the right way through the proper type of their own due diligence, or they can go out and pick a platform that works for them, that they like, and learn to do things the way an institution would do it. You don't want to trade like Joe Blow across the street. You want to trade like Goldman Sachs. You want to make money. You look at some of these institutions, and they can be risk on in markets where it looks like the risk should be turned right off, and they still make 20%. You go look at Goldman days won to days lost for money in a year. Goldman wins in the trading days, is up millions, 200 days a year, and they're down 25 days a year throughout the end. How? On their trading desk. How do they do that? because they know how to hedge out risk properly. So if you're not learning how to do that kind of stuff, then I'm not doing my job because I'm not teaching you, and that's my job because I know how to do it.
Yes.
And your broker ain't going to teach you how to do it because he's trying to keep you naive because he wants you to keep,
exactly.
he wants the money to stay as an asset under his management, right? Because that's how he gets paid. So I think here our job in 2018 is to continue to bring you the news, try to bring as much style to the news as I can, you know, glasses on, smile on my face, enjoy what I'm talking about so that you enjoy what you're listening to as much as you can. Whether you enjoy me or not might be a different topic of conversation, and make sure that you stay as informed. And that if I can't tell you how to do something, you know, lead the horse to water, you know, and then if you choose to indulge yourself in more education, which is ultimately the thing, this is a constant education process. I'm having to read news, quarterly reports every day and digest it and then and put in my own words so that it's digestible for our audience, because this is a constantly evolving marketplace. It's not static. There's nothing staying the same here. It's constantly growing. This ecosystem is moving 24 hours a day around the world in every business everywhere. So people need to understand that while it's fun to chase money, the main thing that you want to concern yourself with is being educated. Constantly be immersed in the education. You need to love the marketplace. You really do. There's just no two ways around it. If you don't love the monetary system, capitalism, and the way it works and all the inner workings of it, and you don't find yourself really tickled to go figure out how something different works so that you might be able to use that to your advantage, if you're just chasing stocks intraday, day trading, or chasing speculative stuff, that's just greed. Greed is going to murk you out of this so fast. You're going to blow up accounts every year. You're going to put a few thousand in, blow up an account, and move along. And I'm not interested in watching people do that. I want to cater to the people who want to get better at this, because I'm every day wanting to get better at this. Every day I'm sitting down and listening or watching or reading something from someone who's a heck of a lot smarter than me, so that I can glean something off of it. So that I understand, hey, this is what they're doing, or this is their mindset when things are like this. How can I then take something from someone more successful than myself and then implement that into my own strategy? Right? So I mean, we need to just keep getting better here at Wall Street Breakdown, just like people need to keep getting better, educating themselves on their money. Ultimately, your money is the most important thing other than your health. Your health is,
I agree.
And you know, like the health of your family or immediate loved ones, whatever you want to call it.
I was talking about some New Year's resolutions. What would you like to see the market continue to do or stop doing?
Stop with the cryptocurrencies. I'd like to see the evening out of that marketplace or the abolishment of it. One of the two. I'd like to see people stop chasing that kind of easy money, because I think there's people that are far too exposed that every time there's a correct. I was talking to a guy. We always do this now. I talk to a lot of people now about this. This is a lot like back when I was actually trading, but I talk to people on a much more international level. I talked to a guy who sold his house, sold his car, sold his wife's car, got into Bitcoin at 18.5 and finds it at around 14.5 now, lost around $100,000.
Ouch.
Yeah. And was like, what do I do? And I was like, I don't know, man. I wouldn't have done it to begin with. I was like, I don't know what to tell you. I would take all my money out of there.
That's scary. So scary.
And you know, it's a lot of millennials and people touting the non-fiat decentralization of all. And I talked about it in that video yesterday. I heard this actually. I don't want to take credit for it. I heard this from Jordan Belfort. You know who Jordan Belfort is?
I heard of him.
Yeah, it's the guy, the Wolf of Wall Street guy, the pump and dump guy, right? Like he was on Fox on Friday or Thursday, and he said, you know, like people think that there's like this limit to like Bitcoin, like the amount of Bitcoin that there will be mined totally, and there is. It's like 24 million or whatever it is. But because there's new currency added to the marketplace all the time, there's no limit to cryptocurrencies. They're constantly diluting the marketplace by new currencies coming in and just continuing to fill in. So like people were worried about like quantitative easing before, and how quantitative easing was basically adding like fake money to the marketplace to try to buff the marketplace up and satiate it while it needed money, it needed liquidity. by adding in all, and people don't just trade Bitcoin. They trade in all these other fluff currencies.
Yeah, that's right.
He's like down the list, hundreds down the list. How many currencies did we cover this year that went from no market cap to billions in market cap in a year?
Too many to count.
There's no reason to have any market cap.
No, there isn't.
And they have a billion in market cap.
Yep.
From nothing.
From nothing.
For just manifested out of the smog.
Yeah, the best way to put it, yeah.
It's unbelievable. And like Jordan was saying, you know, like, and I actually really respect Jordan Belfort. He's got a lot of really good opinions. Very much an outlier in the marketplace because of the way he's done things. And he talks really off the cuff. But I like that because, I mean, if you were talking to me on a private level, you know me, I talk, it's off the cuff.
Off the cuff,
I do not do, this is my business approach here, right?
Yeah.
This is not my normal everyday sitting around the table BSing approach. So I like that. I like that he's very glib. Just give it to me. That's what I like about Trump too. And we're going to talk about that in the review coming up here. But, yeah, I like that he said, like, people think that this is so limited to the amount of currency that can be mined, but every time you add in these new currencies, John McAfee's new currency.
Oh my God.
Right?
Yeah.
You know, like
Yeah.
everybody, they keep adding to the currency pool, and eventually you've diluted it to the point where there's more cryptocurrency than there is real currency. You know what I mean? Like, it's just so foolish. So I'd love to see the cryptocurrency market find itself being, more regulated, to find a nice evening out spot, or straight abolishment. Just go away. But I hate the idea that if it goes away, it's going to take a lot of people's money with it. But man, people have not. The people who lose their money and stuff like that, sometimes you just can't. You know, I say this, and I don't want to say this on here. It's tough to be so about things, but it takes a lot of losers to make one winner. You got to race 10 guys, one guy wins, 9 guys go home with orange slices.
That's right.
You know what I mean? So you sometimes have to have these guys putting money back into the monetary system because they just weren't smart enough to hold on to it.
That's right.
They got it gifted to them because markets are up, economy's up. They got a good job. I know lots of people with good jobs that, you know, like you wouldn't trust to watch your kids while you went to the washroom, let alone watch your kids overnight, right?
Yeah.
Like, but they got good jobs. They make good money. They might have disposable income. But you want to watch people also just take 30 years of good income and have nothing to show for it at the end of it. It's people who just make impulsive decisions. They don't think things through over the long term.
Yeah.
Cryptocurrency is one of those things where, if it was gone, I think I would breathe a sigh of relief for the people who maybe got hustled into being invested in it.
Right, I agree
who've been
with that,
coerced by others through the hype.
Yeah.
And there's a lot of people going to suffer from it. But anyways, what other resolutions would I like to see for the market? I'd like to see the market continue in an upward trend. You know, things have been going really good. I think I'd like to see the market continue to do what it's doing. Everything seems to be going well. The economies are going strong. Employment numbers are good. You know, like I'd like to see the economy continue to push the way it deserves to be pushing. I think we had way too big of a pullback about a decade ago, and we've started to get our traction back the last 6-7 years. Yeah. And I think that it's totally justifiable. And I think the American economy is definitely still the world leader, and everything that's going on right now is deserving of strong global economics. Let's see it continue. I don't think there's a major overvaluation of what's going on in the stock market as a whole. I think we're getting back to the levels that we probably should have been at if there wasn't a subprime mortgage crisis and, you know, Bear Stearns collapsing, Lehman Brothers,
right, yeah.
You know, bailouts at AIG and every bank and, you know, auto company and, you know, the stuff that really just it knocked us back into the Stone Age for a few years.
Right, yeah.
You know what I mean? Like companies were oversold 30-40%, and it took a long time to get back to it. And now we're really seeing those companies get bought up. And I don't think everything is overbought. I really think that we're kind of right on par. So, I mean, I don't think we're going to see 20% gains in the index next year.
Right.
But I would like to think that we continue making strong double-digit gains. I think that's definitely a possibility without there being, you know, war or any of that kind of stuff that really intervenes.
What about retail investors? Should they do anything for this upcoming year? Should they?
I mean, prepare for the worst, obviously.
Right.
We've had a couple good up years here now. I mean,
Yeah.
just because I'm saying I think things should go good, there's a lot of things that could go bad. So, I mean, you could be in crypto, you could be in a bunch of stuff. You should CYA, cover your, cover your
you're behind.
butt. Yeah, cover your butt as best as possible. Be well diversified, be well hedged, educate yourself consistently, keep an eye on your portfolio. Don't listen too much to the talking heads in the media. Make sure that it's you making your decisions and you're not being influenced by ultimately what is people trying to push a narrative. I mean, that does happen. As much as you want to believe it doesn't, it happens on every news channel. You watch news channels that talk about politics. You can tell if you take a step back who's pushing a Democratic or a Republican viewpoint, you know, like without them having to say it directly. So, I mean, just don't be hustled. Be smart, you know. You got to be fairly savvy to be an investor, especially if you're investing your own money without the help of anybody else.
Right.
Stay very savvy. Protect yourself. Protect yourself at all times. Right. Don't stop fighting until the ref intervenes.
That's right. Yeah.
Seriously, like you gotta protect your neck, bro. You should be smarter than that.
Yeah.
You know, like
I agree.
mean, I can't hold anybody else's hand but my own. You know, like, and I have to constantly in the mirror ask myself if I'm not. Am I being fluffed up here to believe something that isn't really as tangible as I want to believe it is because I want to find the next good investment? That's my big concern is that, you know, like, and you're going to miss the boat on a ton of stuff. You're going to miss it. There's going to be money that goes by. You can't have everything. You will not have every investment. Do not become where, oh, my buddy did this and he made money and my buddy did this and he made money and now I got to get in. Well, hey, man, if your buddy won the lottery, you're going to go buy lottery tickets the rest of your life? Like, it's just not the way things work. Investments are going to pass you by. I've talked to you about this before. I've talked to other people. I missed Netflix. I missed Amazon. I missed Tesla. I missed a ton of things because I couldn't see how they were going to run the way they ran.
Yeah.
It is what it is. I was in tons of other stuff. Whatever. Yeah. I don't care. That doesn't affect me. But I wasn't out there touting these things as big money makers. I was in enough stuff that ended up fine that I don't feel like I missed anything, but I remember I wasn't in on it.
Right, yeah.
But I don't dwell on it, and I didn't try to get in at the very top end just to try to say that I was there. You know, so retail investors need to protect themselves at all times. Be smart. You know, you're going to miss a couple of the buses. A bus comes along every 10 minutes.
Oh, for sure, yeah.
Right? You're going to miss a bus every once in a while.
Yeah.
Just let it go.
It's bound to happen.
Let it go.
Yeah.
Don't chase money. Just the greed will sink your ship in this game. I'd like the tax bill to live up to the hype.
Yes, that's
the tax bill down in the U.S. Corporate tax reform is going to drive EPSs up next year. I think we're going to see a lot of money brought back into the marketplace. They're doing that 15% for like a repatriated money. I think it's 15% for liquid assets, 8% for illiquid assets, a one-time a tax rate to bring money back in. They're saying it could be, you know, there's about $3.4 trillion of outstanding American money that's international right now that hasn't had taxes paid on it. I'd like to see the corporate tax rate drive EPSs up, but people not get too overexcited about it and not realize that those are probably already pretty close to priced in already, because we knew this tax bill was probably going to get passed, and then in the last couple of weeks it's been passed for sure, and now it's obviously going to be law here starting tomorrow. And then for the retail side of it, the actual people that are supposed to be really seeing this on their paychecks, they said, you know, January 1st will be the new tax law. February 1st, take a look at your pay stubs. You should start to see, you know, Paul Ryan said this, you should start to see that there's like a significant change in your paycheck. Should be, for the average family, about an extra $2,000 a year of net income. And they said, you know, April 15th, that's going to be the last time you file these old archaic taxes. It's going to be new tax time. And I just hope those taxes follow through and live up to the hype. I'm on that side of the fence.
So am I, yeah.
I'm on that side of the fence. So I want to believe that these guys that put this tax bill together are right and that we're moving in the right direction. And I think we've got a lot of smart people in charge and that We're going to see some prosperity from it. It's going to add more currency back into the marketplace.
Definitely,
Take
yeah.
money out of the hands of government. Government doesn't know how to spend money anyways.
No,
Even though we're hearing that Trump is going to put some serious money into infrastructure here in the next little bit, which is good. That's going to create a lot of jobs. And
That is,
at the government level, and then also in the manufacturing side, which is going to be a lot of private or
Right.
publicly traded companies, right? So I mean, take the money out of the hands of the government, put it back in the hands of the people, and if they're smart enough, they'll put the money into the economy in an intelligent way to plan for their future. And if not, they'll go out and buy new trucks and buy new cars or a boat, or
That's probably what they might do,
spend it
yeah.
on a fancy hat.
Yeah.
Majority will,
Majority will, yeah.
majority will, and whatever. That makes hat makers and boat makers and stuff more money, and that drives up the share price for the people who are invested.
That's true. That's
So
totally true,
hey,
yeah.
man, that's how the economy works. That's capitalism at its finest.
It is. What about the Canadian economy?
Yeah, I mean, we're Canadian. I'd like to see it just keep going.
Yeah, me too.
Keep going the way it's going. Things seem to be doing
Yep.
good. Employment numbers are coming in strong month over month. Industry's coming back. I'd like to see 2018 be a lot more of a paced year as far as real estate goes, because wow, the beginning of last year with Toronto and Vancouver, Toronto especially, was the overpricing was just, it was hectic. I mean, we're going to see a couple of interest rate increases here again next year from the Bank of Canada. We can expect that. I'd like to see, not only in the US with probably 3 expected interest rate increase, I'd like to see these companies or these countries be able to hold on to their prosperity going forward as interest rates increase. That's a big thing. Like there could be a lot of defaulting. But I don't think people are near as leveraged as they were back in 2008. So I don't think we're going to see near the number of defaults that you saw back when people were giving out free money, basically with the, no time horizon and no interest rate to be paid back.
Yeah.
And then all of a sudden everybody came calling for their money and you got your house and foreclosed on and your car repoed. So I don't think we're going to see that on the same levels, but interest rates are going to increase. So I'd like to see, a stabilization of real estate in Canada and a continued trend of employment and strong industry. I think we're going in the right direction.
I think we are too.
I think we're going in the right direction.
How about any companies or industry would you like to see continue or change what they're doing?
Okay. We talked about Tesla. I'd like to see Tesla really be able to prove a lot of these doubters wrong. I think a lot of people are heavily invested in Tesla. It would be nice to see them be able to really increase the production and delivery of a lot of these vehicles and get these timelines shortened considerably.
Right.
And I know they've said in the past that, once things get picked up, it's going to get picked up exponentially. Let's see it get picked up exponentially now, because they're starting to get run through the mud like we talked about. Amazon, I would like to see Amazon really follow through on a lot of things we've heard.
Yep.
They've had nothing but good news. The integration of Whole Foods has worked out just fine. I'd like to see that even more robust go forward. The smart speaker, the introduction of the smart speaker with Alexa has done really well for them. They're at market doing really well. Apple had to put theirs off. I'd like to see now that Amazon has a real lead in a market space, that they can really make that work. And that they can take advantage of it. We see a lot of companies in the cloud computing area starting to make some headway on Amazon, which again is the market leader. Amazon's web services leads by a pretty considerable margin. We'd like to see Amazon continue to be able to lead and not allow these other companies to take some of the foothold away. Amazon's taken on some big contracts recently. I'd like to see that continue because, again, Amazon, if you're invested in Amazon, it is very overvalued still. It's a very expensive stock that's very, very overvalued. We're going to need to see a lot of this stuff come to fruition. And for the shareholders of Amazon, for that share price not to eventually pull back, if some of the blocks start coming out of the Jenga game, it could be a fairly decent dip for that Amazon price. But as of right now, Amazon's doing everything well. So again, 2018, I'd just like to see them build on 2017 and the pharmacy stuff.
Right.
I mean, obviously, that's the big coup, I think, at the end of the day, is Amazon really showing that they can continue to diversify into a bunch of different sectors. And that seems like the right sector to diversify in. I've been touting that since the beginning, that I think that is the right way to go, that they've got the purchasing power to get drugs cheap. They've got the logistics. They've got the retail with Whole Foods, the shipping. They've got it all. The quick ordering, processing. I mean, they're set up to go.
Oh yeah.
So I think they could definitely make that happen. I'd like to see them make that happen. Let's see. I'd like to see Mattel turn it around. That'd be nice. I mean,
would be
just
nice.
just like it's such a brand name I grew up with.
Yeah.
Mattel's been having a tough time. As we see how Toys R Us went. I'd like to see Mattel just be able to turn that company around. It's probably not going to go to Hasbro just because of the conflict of interest in the marketplace.
Oh,
just
for sure,
combining
right, yeah.
the two companies. So I'd like to see Mattel be able to figure it out. And I mean, they could.
They could, yeah.
They could.
potential.
They got a lot of strong brands.
Yep.
Barbie could turn it around on her own. Barbie's
Yeah, it's probably one of their biggest sellers.
she's done it all.
Barbie.
She's done it all,
Oh,
right?
yeah.
She's been to Mars. Sure of it.
Yeah. Well,
Yes.
she's been around the longest, right?
Yeah, she's done it all. She's had every job in the world.
That's right, she has.
Yeah, Barbie could figure it out. So make Barbie the CEO and let Barbie run like the wind. Brick and mortar. I think brick and mortar, we're going to probably see the same thing as we've been seeing as companies that are going to be teetering on the brink. We just talked about Toys R Us, same thing.
Yeah.
So, I mean, JCPenney has been teetering on the brink or somewhat of the brink for a while. Toys R Us, the same thing. Nordstrom's, GNC. There's a lot of companies out there that while we had strong retail earnings through the Christmas season, I think there's going to be more... There's going to be more headwinds for retail than not.
Right.
And I don't know what the dominoes are that are going to fall in the retail sector, but I would imagine in 2018 we see a lot more issues with brick and mortar than we see prosperity on the horizon. It's going to be a few companies cutting throats to stay ahead.
Yeah.
And rightfully so. I mean, that's how business should be. But it was easy go of it through the 80s, through the 90s, when the malls were a big thing.
Yeah.
And with the advent of the internet, it's not an easy go of it anymore. So, I mean, I wouldn't worry too much about the Costco's and Home Depots and Walmarts of the world. But, yeah, or the Targets, or, there are a few outliers.
The big department stores kind
There's a few outliers that, like Target has enough online sales and they're hooked up with Amazon to order things through Alexa to be picked up. They're smart enough that they've diversified early and they're big enough that I think that they're going to be able to sustain. But there's a bunch of guys in the meat of the pack that I think that are probably going to have their knees cut out from under them at some point by just the fact that brick and mortar is slowly dying.
Yes,
and will eventually become a much more of a niche sort of a market.
Yeah.
And a lot of those malls and stuff are probably going to be refabbed into condos.
Yeah, like dust in the wind.
Absolutely,
Yeah.
right? The internet and stuff is going to end up dominating things to an even greater degree every time. I think that's going to fall into things like autonomous vehicles. I'd like to see the autonomous vehicle really pick up. I think that's going to be really interesting. I think when you can start talking about not having to pay someone to deliver things, you can have a vehicle be driven or a truck driven by basically a robot man. Robot man.
Wow.
Or a computer or something.
Computer, yeah, for sure.
Yeah, or a robot. It'd be cool if they actually...
Robot man, I'd like that.
It'd be cool if they put a real dude in the seat. They're probably going to want to save the space so that they can add more shipping capacity. But wouldn't it be cool if they had, like an actual robot?
Yeah, I was thinking like the guy from Total Recall, the taxi driver.
Absolutely,
right?
Exactly.
Yeah.
So autonomous vehicles, I mean, companies like NVIDIA and Intel, companies like General Motors, they're on the absolute forefront of the autonomous vehicle industry. I'd like to see where that's going to go, more so than virtual reality, because that seems like that's going to be the next step. It might even overstep a company like Tesla.
Right.
And Tesla might start to become like the idea of the smart car or whatever.
Smart car, I think, is a good way to put it.
Fuel cell vehicle, whatever it's going to be. It's going to be more of a niche market, maybe autonomous vehicles might start to become a lot more prevalent, and a lot of industries. It might take a hit from it. The truck driving industry,
right?
Bus drivers, cab drivers. What I do for a living, I do some driving. That might end up affecting things a little bit. Your limo driver, eventually flying airplanes and all that kind of stuff is going to be fairly autonomous, and I'd like to see how that industry starts to flesh itself out. What else? Let's see. Esports. You know what? Activision Blizzard and EA, this competitive gaming thing. I've talked to you about this. I don't know how we don't already have universities offering courses on how you can go in and learn how to get your dexterity and your fingers and eyes higher. I don't know why these companies don't have their own campuses training people, because you look at the numbers of people that watch video gamers on the internet the amount of money that's made already in esports.
Yeah.
Just wait till you start selling, like whatever it ends up being, a TV channel or a streaming service where millions of people tune in to watch the best Hearthstone players or Call of Duty players play each other, because you can relate. It's not like the NHL. I can't relate to a guy in the NHL. I might play like men's league hockey or whatever, which I don't, but you might. Yeah. You're never going to be able to relate to what it's like to play on that level. You might like hockey, but you might play Hearthstone against someone, that's rated like, you might get into a Call of Duty game with a guy ranked in the top 1,000 in the world.
For sure.
And all of a sudden now you can relate on such more of a personal level that you get personally invested in it. You start teaching people how to make hundreds of thousands of dollars a year and be celebrities playing video games. There's no industry that's getting bigger and bigger as far as what people do with their spare time than video games.
Yeah.
And I think that's going to be something that takes off. Yeah, I've been in on that from jump.
Yeah.
Video games are only getting more robust, engineered better, more playable, more immersive. It's going to end up being something, I think, that I'm not giving anybody investing advice here, but it's something that I'm expecting in the next 10 years to be a sport that's actually a sport.
Yeah,
it's actually going to be broadcast on, like ESPN on a more regular basis than you see it right now, where it's very niche.
Yes, yeah.
The market for video games is big. It is really big, and it is in some undiscovered country.
That's very true.
There's no doubt about that, because everybody I know, no matter what age they are, hangs out and plays PlayStation or Xbox.
Oh, they definitely do, yeah.
And you tell a few people that play PlayStation or Xbox in the next generation when they're 8 years old that you could make a living doing this.
Yeah.
And you're going to have people really driven to want to play video games for a living at a competitive level.
Yeah.
So I think that esports entertains me, the idea of it. I don't play video games myself, but the idea of it entertains me as a person who might potentially might potentially own some of the stocks involved in that.
Do you have any personal New Year's resolutions?
I'd like to deadlift 600 pounds. 600 pounds is close.
Oh, it's
close.
Common.
It's close for me. 600-pound deadlift would be nice. 315 for reps on the bench.
Yeah, that would be nice.
Yeah, there's a few things.
Yeah.
Just good family life. Kids in good shape.
Yeah, I agree. Me too.
Smart investments. I like my job, so just continue to do all the jobs that I do as well as I can. Just be happy.
Yeah.
Happy. I'm a pretty happy guy, so I'd like to continue to just be fairly happy and content with my life. My health, I can't really control. If you're in good health or bad health, you could get a club foot or something throughout the year.
Right.
But, good mindset, good, solid, strong approach to life on a day-to-day basis. Just having your head in the game on a regular basis and trying to do what you know is right. Just push through. Push through all the adversity. Life is going to throw all sorts of challenges and adversity at you on a regular basis. I do a good job already, I think, of handling adversity and time constraints and all that kind of stuff between multiple professional lives and a personal life and some of my own hobbies and stuff like that. And, find myself at fairly burning the candle at both ends on a regular basis. Yeah. But I seem to stay pretty grounded. So I'd like to remain doing that.
Oh, right on.
600-pound deadlift.
600-pound deadlift. Yeah, I'm with you on that. Well, for me, it'd be 500-pound deadlift. I really want to.
Oh, you're going to have that quicker than
I know.
6.
Yeah. But no, for me, it's want to further my education, just stay on course with what I'm doing right now. A couple other things I'd like to work on is more of a personal thing. Just family life, taking care of people. Just being a better me than I was the day before.
Yeah,
basically.
Man. That's me too. That's totally how I wake up every day. I don't have I know tomorrow's New Year's, but I don't really have a resolution because I do this every day already.
Yeah, I already have a goals list. I just keep following that.
Me too. My day-to-day agenda runs out today, and I just start a new book tomorrow.
I saw that.
Yeah. I put that on
post.
Instagram. Yeah. It's just a new book, right? So I think that's the main thing is to just I don't have resolutions that I was waiting for tomorrow to start.
No, me either. No. I've already had them planned out. So.
Yeah, I met every goal I wrote down for 2017 that I wrote in my agenda at the beginning of 2017
Checked
last
off.
year, everything's checked off.
Yeah.
I did all of it. So I'm pretty happy with that, and I'd like to continue doing that. And yeah, like I said, just day to day. I already in the beginning of December was working on goals, not waiting till the diet starts Monday.
Exactly.
You know, like I do it every day and try to just be better every day. You know, try to leave every situation better than I found it.
Exactly. Yeah.
I think that's the best way you could probably live life. Life's short. You might as well
very short.
Try to have a good time
Yeah,
while
exactly.
you're here. You know, like within some sort of reason.
Oh, for sure. Yeah.
Absolutely.
Yeah.
Don't
smart fun.
Very intelligent. This is fun. I have a good time hanging out with you.
Same here. I enjoy this.
This is
Babble.
really fun. Talk about the markets and you know, like hope to entertain people and give people a hand. And
for sure.
You know, like that in and of itself is entertaining to me. I'm having a good time.
Good time.
Yeah,
excellent time.
All those smiles you see on those videos, those aren't contred, right?
No.
I start talking about that and I enjoy it. You know, like I enjoy what I do and you know, like keep doing it.
Exactly.
Woo! Have a good time, man. I'm Cody from Wall Street Breakdown.
I'm Anthony from Wall Street Breakdown.
Sorry, this was podcast number 10.5.
10.5.
We will be back next week with a podcast that gets back to covering your weekly financial news. We hope that you've had an outstanding 2017 and a brilliant and beautiful 2018 on the horizon. We are rooting for each and every one of you guys out there, guys and girls, and we will see you next week.